And, what I also think is really interesting is when we talk about gold, most people are referring to the nominal spot price, which is a contract price, right? Can you just kind of expand on that a
bit? Yes, I definitely can. Now, the gold price is not the same as the price of gold.
Exactly.
The gold price that you see on the screen is a paper price that has nothing to do with the real price of gold or the value of gold. Sadly, you're dealing here with an instrument where 95% of the daily turnover is in paper. And therefore, the price determination and price discovery is non-existent. This price we're seeing in gold has nothing to do with the real market. So when we are seeing gold coming down, and we've seen enough of these corrections over the last few years.
Even over the last few weeks.
Yeah, absolutely. Every time it reaches a level, they hit it straight away. And that's, and of course, we, like you, we are not seeing any sellers in the physical market. The physical market is not selling.
Right.
It's just the paper market where they're speculating and manipulating the gold price. And therefore, the people who actually understand the role of gold and the role of physical gold, they don't worry about the price on a daily basis. It's so easy. We can go back 5,000 years, we can go back 2,000 years, we can go back 100 years, and it's all the same. Gold is not an exciting investment. But it's not a Bitcoin. Gold is just the only money that has survived in history, and the only money that reflects stable purchasing power.
Right.
And as we know, an ounce of gold has bought the same the suit for a man or any cereal. The price has been the same for thousands of years, measured in gold. So that all gold does. I wrote in an article recently, don't buy gold if there are government surpluses, and if government debt and private debt doesn't go up more than inflation, and if there is sound monetary policy and no money printing. And of course, if inflation is zero or virtually zero, remember that even at 2% inflation, which is a ridiculous target that many countries have, US, Europe, many European.
No, now they're all going to an average.
Yeah. That means that prices double every 36 years.
Yeah.
2% inflation.
If they actually hit that.
And is that desirable? And we know inflation is much bigger than that. If all of those conditions are met, you should own gold. But right now it's the opposite. Debt is absolutely going up exponentially. Deficits, as we said, U.S. deficit, half of the budget spending is actually a deficit. And interest rates are manipulated low. And bond prices are massive, and it's all because of this manipulation. You haven't got any of the conditions here that would satisfy not owning gold. On the contrary, you have all the conditions that will make gold absolutely go crazy at some point. But we're not buying it for that. We're buying it to protect what we have. We're not worried about if gold. I always say, don't wish gold to go to 10,000, 100,000, 100 million, or 100 trillion like the Weimar Republic, because if it does, life is not going to be as pleasant as it is now. Yeah. So don't wish for it, but be prepared that it could. and therefore you should be protected. And that's really what we are looking at here. Don't look at gold as an investment that you want to go up. Just as pure protection against a totally sick monetary and financial system.
Well, I'd like to ask you, because I never hear anybody talk about this, except I talk about it. Why has gold never gone to zero in 5,000 years?
Yes, well, it's very simple. Gold at a very early stage became money. And of course, it is also an asset. You actually have to do some work to extract it out of the ground. There's scarcity also, of course. And in order for money
real
to have a
scarcity.
value. Sorry?
Real scarcity.
Yeah, real scarcity.
Instead of manipulated scarcity, actual real scarcity.
Therefore, so if to give an asset or like money an intrinsic value, but there has to be scarcity, because if now like normal money, fiat money, you whatever you need, you print it. You need more money for weapons. You need more money for food. You need more money for budget deficits. That's printed. And of course, anything that's fabricated out of nothing is worth nothing. And I mean, that's a point that I make over and over again, and you too, that you don't think that this money is worth anything. It's just an illusion. People can live under illusions for quite a long time, and the world has.
A lifetime, really.
Yeah. But that illusion will sometime, and not too far away, disappear, and it will just be gone, and that means that the values that illusion represents will also be gone, and therefore it's very simple. You take, I wrote in a recent article about, for example, the soldiers. Or you can take the soldiers in empires like the Roman empires. Soldiers are always paid in gold. And there was an emperor around 100 and something AD, Septimus, and he said to his sons, "Pay your soldiers in gold and nothing else, and don't worry about the others." So you pay yourself, because he knew that if you want to have the soldiers loyal, you got to pay them in real money, and even soldiers in those days understood that was the only real money, not debt instruments or not promises of future payment. If they didn't get their gold, they walked away. The soldiers, I mean, they were bought anyway. I mean, there wasn't a conscripted army most of the time. They were bought. So, that's why there's a history that makes gold. The combination of the scarcity and the fact that, as I said, it does